This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, March 2nd, 2015. Euro dollar. So the euro is broken down below some key multi-day range support at 12.65, with the focus immediately on a retest of the 10.98 recent 11-year low. A break below 10.98 this week would open the door for a fresh measured move downside extension towards the 106.65 area over the coming weeks. However, inability to take out 10.98 or establish a daily close below 10.98 this week would keep a consolidation intact and maybe open the door for a more significant correction before the market is ready to head lower. It is worth noting with the euro, while the downtrend is firmly intact, weekly studies are very oversold on a technical basis, and this could delay any immediate acceleration to the downside. Sterling dollar. So cable looks like it could be putting in a lower top now after a nice correction over the past several weeks. The market remains confined to a downtrend, and a lower top now could be in place in the 55.50 area ahead of the next downside extension back towards and below the recent 2015 low at 49.51. Look for a break and close below 153.15 this week to confirm and accelerate declines. Dollar yen. So dollar yen is starting to break up a little bit within this consolidation that we've seen over the past several weeks. The market's defined between 121.85, the 7-year high from December, and the key 115.55 low from December. So we're going to need to see a break on either end for clearer bias. But again, with this market remain locked within a very well and intense uptrend, there is upside favored, eventually above the recent highs that we saw around 120.46 and then towards 121.85 further up. A break back above 121.85 would expose the 125 area, while any setback should now be expected to be very well supported ahead of previous triangle resistance in the 117 area. Euro Swiss. Euro Swiss has been very well bid and has enjoyed a nice recovery since breaking down to those fresh record lows that we saw several weeks back. The market is now consolidating just under recent highs at 108.15. We could see a little additional corrective activity over the coming sessions, but only a break back below 104.15 would delay. A break above 108.15 would expose the next key upside objective, which comes in by psychological barriers at 110. Aussie dollar. So Aussie could be poised for a bearish resumption right now after stalling out at 79.13 last week. Look for a break and close below recent lows at 77.38 to confirm, while a break back below 76.25 would officially confirm and accelerate declines, opening the next major downside extension. Only back above 79.13, that high from last week, would delay the current bearish outlook. Dollar CAD. So dollar CAD has been consolidating over the past several weeks, but is clearly locked within a well-defined uptrend after the market broke to a fresh 5-year high at 128. The focus right now is on a next upside extension towards the 2009 peak at 130.65, with setbacks currently being supported at 123.50. Kiwi dollar. So Kiwi looks poised for bearish resumption after stalling out by key previous support just over 76 in the previous week, and the market will be looking to break back to the downside towards a retest of the 71.76 multi-month low. Look for a break and close below the recent low that we saw in the 74.20 area from last week to confirm and accelerate declines. SPX 500. The S&P 500 broke to another record high last week, trading up to the 2120 area ahead of this latest minor pullback. And though there is risk for a pullback and a correction, the market would need to establish back below the low from the 17th of February at 2083 to confirm the onset of some form of a top and deeper correction. Until then, the pressure and focus remains on the top side, with a potential move to next key psychological barriers at 2150. Gold. So gold is enjoying a nice recovery over the past several months since basing out in 2014. And though we saw a nice pullback since January, taking us all the way down to last week's low at 1190, the constructive outlook remains intact, and this recovery outlook remains intact, with the market now seeking a higher low at 1190, last week's low, ahead of the next upside extension beyond the 1308 area and towards 1345 further up. Ultimately, only back below 1190, that last week's low, would negate or delay this outlook. That's all for now.